Good evening, everyone. Hello, and I'm delighted to welcome you all for today's webinar on the market insights. So in the fast-paced world of foreign exchange, staying informed and making well-information decisions is very important. So this webinar aims to provide you with valuable insights and knowledge that will empower you to navigate the forex markets with confidence and precision. So after for today's webinar, you guys are going to learn about some of the main fundamental that happens in the world, and then how can we use all those fundamental analysis combined with some technical charts to have a better trading signal in future. So before we start, here is some risk disclaimer. So today's Market Insight webinar is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Phil Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. Participants are responsible for independently verifying information and considering their own financial goal and risk tolerance. Just a small risk disclaimer for you all. So without wasting any time, we are going to start our webinar now. So before we start, we are going to discuss about recently and later what's going on, then what will have a huge impact towards the market. So just a kindly reminder for today, we do have a lot of important data, especially from the United States, which will be released around 9:45. This is a GMT plus 8 time, which will be released at 9:45 p.m. The S&P Global Service PMI is very important. And then at 10 p.m., we do have another ISM non-manufacturing PMI. And we also have another important event, that is BOC interest rate decisions that could have expected to have a huge impact in the market. So we need to explain what is the ISM non-manufacturing data first. So for the ISM non-manufacturing data is mainly one of the crucial economic index that based on a survey of more than 400 non-manufacturing firms, purchasing and service executive. To put it simple way is this non-manufacturing data is mostly, it will calculate the survey, the market confidence towards how will be the non-manufacturing sector in the United States. If this data, the reading is higher than the market expectation or even improved from the previous reading of 52.7, then we can expect that there will be a lot of high chance that US economy might be continue to recover, and then it will reaffirm that and combine with the positive non-farm payroll data that currently the overall prospect for the US economy are very positive as well now. And you can also notice at the charts there, overall trends for the US dollar are still remain very, very bullish, and currently is also successfully break above our previous resistance level around 104.20. So to support why overall trends for dollar are still remain positive is mostly due to recent data, especially the non-farm payroll data, which the reading came in much better than the market expectation. So this is one of the reasons that caused overall trend for dollar to become positive. So whether the dollar trend will continue to extend its gains or not will be highly dependent on tonight's data, which is the ISM non-manufacturing, which is very important for everyone to be focused on. Because if the data readings might be better than the market expectations, then it will enhance the probability that dollar should be continue extend its gain, and maybe it will reach around 105.25, our next resistance level. And if not, if the non-manufacturing data provides some bearish reading, then we can expect that there will be a chance for the dollar index to start to have some retracement, and then maybe it will retest back on the support level around 104.20. So support level is 104.20, and then the resistance level should be 105.25. Traders are advised to continue monitor these two range for a better trading signal. For example, if you want to consider it should be a good long opportunity for dollar, then maybe you can consider when it reach 104.20, a strong support around here, then your stop loss level should be put below. Then with this kind of profit, this kind of trading strategy, then we can expect that there will be a chance for dollar to start to retest back the support and then rebound back towards the resistance level around 105.25. But when you calculate the risk reward ratio, the stop loss level should be around 50 pips or 40 pips. But if you are correct, your profit level should be around 100 pips if we are going to according to good support and resistance level for you to do trades. But just a kindly reminder, today's data might have some huge impact. So traders really need to have some careful trading or risk management strategy to enhance their trading strategy in future. So when we expect that there will be a chance for dollar to continue extend its gains due to the previous successfully breakout, then we may focus on the gold market also. So you can also notice, right, overall trend for gold are very bearish, especially if successfully break below the crucial upward trend line and then the support level around 1930 around here. So overall trend for gold remain pessimistic, mostly due to the appreciation of the US dollar. As I explained just now, why dollar continue to increase is mostly due to positive economics outlook. And then for this week, we also do have a lot of Federal Reserve member might come out and provide some statements. So the statements are also very important, a very important catalyst that will be affect the movement for the gold market. So if we are going to only look at the technical charts on the gold, it's a very good breakout, especially break below the upward trend line, and then the support level should be 1930. And that is also, according to the H4 chart, is also successfully break below the support level already. So in short term, we can expect that due to this successfully breakout, there will be a chance for gold market to continue extend its losses until its previous support level should be around 1910. But you need to bear in mind, when sometimes if you need to have a better probability for you to correct your trading style, maybe you need to wait some retracements first. It's better strategy that you wait until gold have some small retracement and then reach around 1930 around here. Then you put your stop loss level around 1935. Then in long term, if you are correct, your loss level, your profit level should be much higher, larger than your stop loss level on 1935. Because if you are correct, right, if you didn't hit your stop loss right and you are correct, right, we can expect that there will be a chance for gold market might extend its losses should be reached around 1910, another support level. But when you calculate the risk reward ratio, your profits area should be around 210 pips, but your stop loss level should be around 80 pips, which is a good thing that we can focus. And just for a kind of reminder, market there is no 100% accuracy one. So you need to have some good risk management in order for you to have consistent profits in future. Instead of you just lose everything in just one trade size, it's better for you to have some consistent trades that can enhance you in long-term basis. And then another thing that we are going to focus on recently, the most important thing recently, is regarding the pound sterling. And just for a kind of reminder, currently UK economy are facing a very pessimistic economic outlook. And you can also look at the news and notice that Birmingham declared defaults. So this is a thing that we need to 100% focus on the UK market. So whether the Birmingham default will provide a high impact on pound or not, we need to also focus on the support level, should be around 1.2550. And you can also notice traders currently are also all together to monitor this kind of support level. So any breakout below should suggest that the pound should have higher chance to continue to extend its losses due to the Birmingham defaults things. So this is the things that we need to focus on the pound market. And then in long-term basis, especially for the daytime charts, you can also notice that pound also successfully break below the upward trend line, previous upward trend already. It's indicated that there will be a chance for overall trend for the pound to start to become much bearish already. And then you can also link back to the stronger dollar. Strong dollar, along with the pessimistic economics outlook in UK, will enhance the probability that GBP USD might continue extend its losses, especially if break below the support level. So pound is the thing that we can focus on now, but better for you to have some patience first to ensure that it will successfully break below. Another thing is regarding the oil market, and you can also notice that recently overall trend for oil are very bearish, very bullish, especially is successfully break above the resistance level around 83.95, which is also the previous top. So after this breakout, overall trend for crude oil should become very positive now. But now that we need to be careful is you can notice the oil market currently is testing a new resistance level. It's very near the new resistance level around 88.75. So what can we focus now is 88.75 that we need to look at it. Any successfully break above, then would suggest that this thing, the crude oil should continue to extend its gain. It might reach 93.35. To explain why overall trends for the oil market suddenly become so bullish, even though you can notice the pessimistic economics outlook, especially in China, due to some property crisis sector, but the oil market remains strong. Why does this thing happen? It's mostly due to the supply disruption issue. So you can notice recently a lot of OPEC members, including Russia and Saudi Arabia, they claim that they are going to extend their production cuts until the end of the year. So this is the main thing. When they reduce their production cut, it could means the supply for oil should be start to decline, and this should be increase the price, because lower supply, the price should be normally increased one. But in better perspective, or we can focus on the resistance level around 88.75. Any breakout should suggest that oil market should be continued to increase further. But if you are going to use the risk and reward ratio, I don't recommend you, because this should not be a very good risk and reward ratio trades, because you can imagine your stop loss level should be put below 83.95. If you want very safe, then maybe your stop loss level should be put around 83.95, like precisely reach the support level around here. So this should be a good stop loss level in case, but it's successfully break below, then you really need to close already. Then when you look at your stop loss level and until the current price, your stop loss level should be around 200 pips or 230 pips. But your profit level, we can expect that they will be low, a high chance that oil market could be slightly increased a bit, should reach around 88.75. And then your profit level should only around 210 pips only. So it's not worth, you are going to lose like around 20 to 30 pips, the difference risk reward ratio. So this shouldn't be a good recommend trader. But if you just want to focus on the fundamental side, you really think that OPEC is really going to reduce their productions in order to protect or stabilize the oil prices, then this is the thing that you need to focus on also. 88.75 crucial resistance. Any breakout, we need to focus until 93.35. Another thing that we can focus on is regarding the USD JPY. You can notice overall trend for UJ still remain very positive. There are two reasons. The first reason is, I think you guys are already familiar to it, due to a strengthening US dollar, especially after the economics data, strong economics data were released from the United States. The second fundamental is regarding Japanese yen currently are still facing a significant downwards pressure. A lot of investors still don't have much confidence towards the Japanese yen. So why does this thing happen? It's mostly due to a few things. So if you are going to look at the interest rates and you compare the Japanese interest rates with the global central bank, you can notice that the Japanese interest rate should be the lowest in the G7 country. You can also focus on the even the US interest rate is already reached around like almost all-time high. So this is the things that we can focus on. So when US decide to increase the interest rates, but Japanese yen is not going to increase the interest rates, the interest rate differential are very huge, especially for USD JPY. So due to a low interest rate in Japanese, investors start to sell off yen. Then they invest in a better higher interest rates country, which can offer you a higher risk-free return. That's why USD JPY now remain bullish and Japanese yen keep dropping. And then what's caused the biggest, what was the biggest catalyst that caused the Japanese yen drop that significantly is also due to some statements, currency intervention statement from the Bank of Japan. You can notice that recently a lot of Japan's policymakers start to make some statement. Recently, some policymakers claiming that they are going to intervene the currency, but there are also another policymaker saying that Japanese government shouldn't go and intervene the Japanese yen. So the protections, the uncertainty for the Japanese yen remain very high, because it's unclear how the Japan policymaker is going to handle the currently negative prospect for the Japanese yen. So the uncertainty remain high for the Japanese yen. So a lot of investors still remain like they start to sell off the Japanese yen and then reinvest in others country. So Japanese yen remain weak as for now, but what can make it more stable, you need to focus on what's the policy plan, the money interventions plan, especially from the Bank of Japan. This is the most important thing that we need to focus on now as for now for the USD JPY. Of course, you like USD, you like risk, then maybe you can consider this kind of pair. because normally any announcement regarding the money intervention, the movement should be around 100 pips, should be around 100 pips, minimum like 100 pips already. This is the H4 chart. So usually can focus also, but you need to highly be careful on it, because money intervention is a huge thing for everyone, especially for the investor also. Not only money intervention is very important, monetary policy, which is also very, very important for the investor in the Japan also. So this is a thing that we can focus now. Another thing that important is regarding the Aussie dollar. So you can notice that yesterday the Reserve Bank of Australia is actually decide to maintain their interest rates, and saying that currently the jobs market, the inflation market has already slowed down already, and then there will be a chance for them to reach a 2% until 3% inflation target by next year. So this is one of the things that could support Aussie dollar to continue to drop further. Why? Because when they mentioned that if the inflation is going to stabilize and then no more high inflation in Australia, then Reserve Bank of Australia might not continue to increase the interest rates more in future already. So when they do not increase the interest rates, but if you're going to focus on the US and UK, EU, they might increase the interest rates. So investor will try to shift their portfolio from the low interest rates from Australian dollar towards other currency. So this is one thing that could continue to support some bearish trends for the AUD USD. But according to analysis technical side, you can also notice that currently Aussie dollar are still testing a strong support level, should be around 0.6305, a very strong support level around here. To have a better clarification, it's better for you to wait until it successfully break below first. Then another support level should be around 0.6190. So it's not only the Reserve Bank of Australia, the monetary policy that affect the currency. You can also notice that recently the property crisis in China is also keep affecting Australian dollar. Why? It's because Australia and China, it's because of China can consider as the largest trading partner for the Australia. So when the economics in China deteriorates, become bad already, then investor will try to think that it should have some negative impacts towards the Aussie dollar. So this is also another reason that caused the Aussie dollar to continue to drop aggressively, especially this week after this kind of property crisis still come out, and after Reserve Bank of Australia provides some dovish tones. So as for now, we need to focus on 0.6395, a strong support. Then the next support level should be around 0.6190. This is a trend for Aussie dollar. And then another thing that we can look at is regarding the Nasdaq maybe. So you can notice that overall trend for Nasdaq has started to become quite positive already, but it's mostly due to some technical corrections. And then you can also notice that recently, due to some high AI technology thing, investor AI hype, artificial intelligence hype, investors trying to shift a lot of their investment towards the AI investment. And then you can notice that recently, including Microsoft, Google, their share price is trying to increase aggressively. And then you can also notice that if we are going to look at the charts, there will be a chance for Nasdaq to trying to form some double top signal. It's trying to form already. So short term, we can expect that there will be a chance for Nasdaq to continue increase slightly, maybe until 15860. But after it reach around this range, you need to more aware and very be careful for your trading strategy already. My recommendation is maybe you can consider a TP level when it reach here. But any successfully break above, then it will recommend that there will be a chance for Nasdaq to continue, as then it's gain in long-term basis. But in short-term basis, if it fail to break out above, and then if here form some reversal candlestick, then there will be a high chance that the Nasdaq might form a double top. Then it will start to retrace back and reach around 14730. So even though overall Nasdaq are very strong, but you need to aware that you need to be careful. Maybe currently it might reach the peak already, then it might form a double top after it reach a peak. So this is the thing that you need to more aware on it. But if break out above the resistance level, then it might mean that the double top is not going to form, then long term should be continued bullish trend. But if they form some candlestick reversal, then you maybe need to consider stop your long order. Then you consider that there should be a chance for Nasdaq to form a double top. So this is a crucial thing that we need to focus on. Nasdaq. So this is all the most important products that have some volatilities recently. And then just a kind reminder, we need to move back towards our economics data. Just a kind reminder, for today, we do have a lot of crucial economics data that you need to focus on. It's better for you to wait after the data release, and then you focus on the trades for dollar as well as the gold market, because I think due to today's data, especially all of the data from the United States, dollar, the movement should be very huge, and then gold market should be very huge also. So it's still advise you guys to set some stop loss level or TP level when you are going to trade, especially before the data night. If you don't like risk, you have a very low risk tolerance, then I would suggest you to wait until the data release first, avoid huge volatilities in the market, and you start to monitor the new candlestick on it. So this is a thing that you need to be careful with it also. And then Canada, we do have the monetary Canada dollar also have another important impact, which is the BOC interest rate decision, which is also very important. If BOC decides to increase the interest rate, then the Canada dollar should have some retracement. Sorry, the USD CAD should have some retracement due to strengthening CAD. So now, Canadian dollar are still testing a strong resistance around 1.3660. We need to monitor the monetary policy from it first. Not only monetary policy, we also need to focus on their statement first. So if their statement are very dovish, means that CAD should be dropping, and then there will be a chance for CAD to increase further, USD CAD to increase further. But to have better confirmations, it's better for you to focus on the resistance level around 1.3660, and then focus on the monetary policy statement from BOC. Because if they suddenly shift their monetary policy decision from dovish to hawkish, then CAD should become strong, and then USD CAD should start to drop further. So USD CAD is also another pair that are very important for everyone to focus as for now. And then you can also notice that if you are going to look at the daily charts, now it's really a strong resistance level, because previously it's already tested like multiple times already. So this should be the 7th time they are testing the resistance level around here. So any breakout should suggest that it will still continue increase slightly until 1.3795. And then you need to focus on this consolidated area already. Okay, so the high impact news should have some should cause the USD CAD to experience a huge volatility. So you really need to more be careful on the trading, especially focus on USD CAD, because two huge fundamental that will affect USD, the US data, and then another fundamental will affect CAD also. So be very careful if you want to trade the USD CAD. All right, this is all the most important market insight that I can provide for you guys today. So if you guys don't have any questions, then I think we are going to end here. Once again, thank you so much for your participants, and then good time, and hope you guys have a good luck for your trading journey also. Yep, thank you everyone for your time.